Good morning to you all. Absolutely delighted to be here. My name's Richard Parkhouse. I'm on the board of Forsys. I look after the IR. I think you already gathered that. I'm really pleased to be here to give you an update, an overview of our flagship uranium project in Namibia. What the company's been up to and where actually we're heading, especially, given the encouraging environment that we're all experiencing at the moment. But first, let's just get out that. I'm sure you can't read any of it, and we'll move on. So a quick overview. Forsys Metals is a TSX-listed exploration and production company, which has acquired 2 uranium deposits in Namibia, which is in South Africa, combined as what's called the Narasa project, or simply Narasa. We have a renewed focus for growth after a period of care and maintenance, like many others, and are building on our strengths and particularly our relationships in Namibia with both government and infrastructure agencies, all of whom are very pro-Forsys. To bolster this, we actually appointed another board director last year, Jeremy Hangula, who has exceptional relationships with the government and infrastructure agencies. We're well capitalised, having sold our Namibian gold interests at the beginning of the year, and we also did a financing with Red Cloud, which I'm sure you read about last year, which provided further robustness to our balance sheet, and this positions us pretty well to exploit any synergistic asset acquisition opportunities that might come along as part of our growth plan. Forsys has an agile management team and a strong board with significant mining and capital markets experience, and the core team has actually been together for many, many years. So the key thing here from this slide is advancing the Narasa project is absolutely core to our strategy. And over the last year, we've reorganised the company, recruited a guy called Pine Van Wyk as our local Narasa project leader to take this forward. Now, this guy is the real deal down in South Africa and Namibia. He's a seasoned mining veteran with vast experience and reputation in operational mining, and particularly in the uranium sector. And he himself has actually recruited a very, very experienced team, which we'll see a little bit more in detail in a minute. Thus, I hope already you're getting to see that we're in a good position to actually transition from the development status that we're in at the moment to one of the largest uranium producers in the world. A quick overview. You see the timeline, but very quickly, we acquired our assets, Valencia and Namibplaas, which make up Narasa, between 2007 and 2010. We got the license in 2008 in Valencia to go mining, which is a fully permitted license. Feasibility drilling has all gone on, and of course 2011 marred the industry by the Fukushima disaster. But given that, most of us were forced into care and maintenance, during which time we maintained minimum cost, we made sure all the licenses and permits were well up to date, but we did continue test drilling, which actually culminated in our 2015 definitive feasibility study, which was published. And more recently, since uranium prices have been improving, we've actually emerged from this period, and we've redefined our strategy, we strengthened our board, and we put a wide program of analysis into action, which we'll look at. And this would include all aspects of geology, pit optimization, new technologies, size of mine, grade of ore, and impact on CapEx and OpEx. Let's look at our flagship project. Narasa is the largest permitted uranium project in the world, as measured by proven and probable reserves. Let's look at this in more detail. The two graphs basically show the permitted projects that have not yet gone into production, and also excluding, I might say, Athabasca, and also the sites which are still in care and maintenance. But you can see by the graphs that Narasa, on the left-hand side, would be the largest permitted uranium project in the world as measured by annual production, with 5.2 million pounds per annum, and also the largest reserve with 91 million pounds over 15 years. It has the potential to become a future Tier 1 uranium mine and potentially one of the most important strategic projects in the world. And once again, let's look at the detail on that. This slide shows a comparison of the world's largest uranium projects. As you can see, the Narassa's annual production of 5.2 marks it as a ranking of 8th largest in the world. Now, most permits, licenses and infrastructure are in place. Narassa's Valencia has that permitted 25-year license, and we've actually gone out to get another license for the Namibplaas, which we should be awarded very soon. Most of the infrastructure agreements are already in place or being finalised across all parts of infrastructure, water power, roads, rails, seaports and so forth. So even though we are hopeful of enhancing the project's economics, the old DFS from 2015 already reported compelling financials. And if we look at these in a little bit more detail, we've got a life of mine of 15 years. We've seen the reserves and production already, so £91 million of total reserves and 5.2 annual production. Revenue of about £5 billion, operating cash flow of £1.75 billion. We can go down the list, you can see it there. But it's really quite staggering that actually we can get an internal rate of return at 32%. These are, even though they're old results, from 2015, pretty outstanding forecasts. We also, we also have tremendous leverage to rising uranium prices, the last point on this slide. And how does that work? Well, this graph shows the detail. If uranium price rises by £15, and our DFS was based on a price of $65 per pound. So if it goes from 65 to £80, this could be a potential increase in pre-tax NPV of 89% for Forsys to $1.175 billion. So I hope you see the significance of these assets, and once again how well we are positioned to transition from becoming one of the largest uranium producers in the world. The capital markets profile, and look, apologies, I know everybody's apologising for small letters and things like that, but let me talk you through it. We have roughly market cap of about 125 million CAD, outstanding shares of 195 million. Looking at the centre pie, we've got strong institutional base of investors. 54% are institutional investors, and we've got long-term relationships there. We've got no debt. We've got cash in the bank of about 18 million. But like many other uranium explorers, our share price has itself been significantly depressed, for many, many years. And even though we've seen a resurgence, it still is taking time to come back. But on the right-hand side, it does show that we're in the top quartile of top-performing stocks. There's still a long way to go for us, and we're hopeful that all these studies, which we're going to look at, that are going on down in Namibia at the moment, are really going to help to enhance the project's economics and then hence actually help improve our market valuation. The board, I want to just mention Mark Fruin. He's been a director of Forsys for 17 years and CEO since 2019, involved in mining transactions from a legal perspective for 35 years. But the two key guys are really Martin Rowley and Paul Matasek, who are veterans of the mining industry. And both of these guys have at least 40 years each of leading multiple mining projects with highly successful explorations, developments and disposals. And they've both been board members for 15 years. We're located in Namibia, and in the Erongo region, which is its core uranium district. You can see from the map, well, hopefully you can see from the map, on the top right-hand side, the two sites, Valencia and Namibplaas, which are 7 kilometres away from each other, and 35 kilometres away from the famous Rio Tinto's Rossing mine. Narassa has close-by access to the Swakopmund seaport, which is only 90 minutes away, which is great for offtake and transportation and delivery. But for those of you who are less familiar with Namibia, it is a politically stable, low risk and hugely friendly, mining-friendly jurisdiction. They've been involved in mining for many, many years, and uranium mining for the last 45 years. And the Fraser survey ranked it number 1 in Africa and 26th in the world in 2021. It's very, very pro-business, and fortunately, given we built strong relationships with the governments, very, very pro-Forsys. So to put some stats on it, Namibia was ranked in 2021 as the second largest uranium producer in the world, recording £350 million production over the last 45 years, at an average of £23 million annually. In addition, it was ranked 5th in the world by its total estimated uranium resources of more than £1.5 million. So you'll see from the map that Namibia has been host to some of the most famous mines that you can probably think of: CNNC's Rossing, CGN's Husab, and Paladin's Langer Heinrich. So it's a very, very key place. Let's have a look at the isometrics quickly. Valencia has an area of 1.3 million meters squared and a depth of 420 meters. Namibplaas, 1.1 million meters squared and a depth of 264 meters. All of these reserves are provable and proven, proven and probable using standard technical guidelines. And the Valencia reserves are 69 million pounds and Namibplaas 22 million pounds, which give you the 91 million pounds that we were talking about earlier. It has favourable topography with hard rock, alloskite deposits, and a low strip ratio. And so, whilst the ore grade in the DFS study was on the lower side at 200 ppm, we really hope that actually all of the analysis that we're going to be doing is going to see how we can actually improve this through different mining techniques. We are committed to a key development plan. We recruited this guy who I mentioned earlier, Pine Van Wyk, earlier on this year. He is a qualified metallurgic engineer. He has senior operational, exec and directorship experience in all sorts of uranium mining companies. He worked at Rossing, he worked at Langer Heinrich uranium mine for 4 years, as well as being lead consultant on the Husab, which is pretty much the second, third largest mine in the world. During the past 18 months, he's actually been leading a project on the Rossing uranium life of mine extension. He selected a team of highly respectable engineers and mining consultants, geologists and EIA consultants, and they have an aggregate of something in the region of 180 years between them. And their purpose is, as you see on the screen, to re-evaluate all of the mining and process engineering aspects, re-review and update all licenses and permits required, re-review all of the infrastructure. So even though most of this stuff is in place, it's all being dusted down again. So we really are getting ready for this transition. And ultimately, the result of all of these studies will be used to remodel and update the 2015 economics. But in more detail, in terms of mining, the team are reviewing the geology data, considering how pit shell design and slope parameters can potentially enhance recovery rates and extract quality. We know new technologies exist that can be factored in, and the team are examining how newer alternative mining techniques and equipment can help optimize our site production and evaluate how these things can improve costs. The ability to outsource more economically, finding trade-offs in alternative processes and engineering design will all help impact our OPEX and CAPEX, and therefore hopefully improve the Narasa project. I won't spend much time on this. Most of these are in place, as we discussed earlier. And hence, I want to conclude the presentation by recapping and going through what we have talked about. Firstly, Forsys Narasa project is one of the world's largest permitted undeveloped uranium projects by reserves and potential production, as compared to other stage projects. It has proven and probable reserves of £91 million, an annual production of £5.2 million over a 15-year life of mine. As and when it goes into production, Narassa is positioned to potentially become the 8th largest mine in the world. Certainly, it's going to be one of the most important projects, new projects in Namibia. Am I running behind myself? And so the DFS, we have actually understood to have really compelling economics already, which we hope to improve. We've seen the IRR of 32% and pre-tax NPV of 623. And we've seen permits and licenses and key infrastructure are largely in place. And we've seen the fact that we have a strong board and management team and a highly experienced team that's now put in place down in Namibia, which are driving things forward. Now, I would point out that these things are going to take time, but we hope that actually by May, June, we will have a very, very clear view of how this is impacting the previous DFS study. The NPV we talked about had tremendous leverage to rising long-term uranium prices. And the fact is that it has really compelling value, trading at about $0.84 per pound, which is a 72% discount to the market at the moment. Finally, we're well capitalized, we got no debt. So we're getting into a really good position, I think, to transition from this exploration and developer stage, actually putting this thing into action. And that's going to be a 2023 project. There's a lot of stuff being done down there at the moment. We're very excited about news flow, which should start coming through probably over the next month, 2 months, 3 months, as different things start coming through. So look, thanks a lot for listening to me. Really appreciate being here.